Hey trader. All right, so I've been working on this in the background for quite some time. Very excited to make an entry on this. So we're going to talk about an Asia model building using time and liquidity. So here are the rules. We're going to be using the kill zone time 8 to midnight, narrowing it down 8 to 10. We're going to choose the pair AUD-JPY. And the reason for that is if we look at what goes on in Asia, the two markets that we're really interested in are anything that's related to Sydney, anything that's related to Tokyo. So JPY pairs are almost like a given in that scenario. And we're going to use AUD, Australian dollar versus the JPY. So coming back into some Forex pairs, the concepts we're going to use: opening range, internal versus internal liquidity, entry after a raid or a continuation entry, example OTE or fair value gap entries. Waiting until after news will always be a concept, and for exits it's going to be partials and swing projections. So the example for this is going to be Monday. So first off, starting with the daily chart, we can see we are in some sort of range between this high and this low, and I'm looking at this leg right now, and so within this leg, this swing projection, we've just come up into a bearish order block. These are daily candles. I'm going to look at this one here, which is a bit of a doji. So this candle is the Monday, and the principle is the taking the quadrant. So back in I think it's the Sniper series, if I'm not mistaken, ICT talks about breaking down ranges and then breaking down session highs. And looking at the interest rates in terms of general expectations, again, Forex pairs need to do a bit of extra analysis. JPY is very low. Australian dollar is relatively higher. So the pair will seek yield. Currencies will seek yield. So if the yield is on AUD-JPY and that is the main pair on the quote, or the first pair in the first currency in the pair, then we're expecting AUD to have strength and JPY to have relative weakness. Can't forget to mention as well that New Zealand, which also would be in that Sydney market, has a higher interest rate. So either one of those pairs, AUD-JPY or NZD-JPY, probably going to be good mixes to look at for this Asia model. So we're going to jump into it. Here is the Monday. I'm going to use a 5-minute chart to do this outline. And hopefully I can articulate this in a way that will make sense. So taking the concepts from ICT, also going to blend in some MMXM. He's shared a great tidbit on an Asia model, and then using some concepts in terms of liquidity from Nexus Blast Trading. I just found this channel and it lines up perfectly with some of the Scout Sniper series information in ICT. So I'm going to be taking some of that information from his video as well, and I'll put some links in the description. So let's jump over to it. So let's go full. I need one more thing before full screen. Let's put in our vertical lines. And I'm going to break this down piece by piece. So the session times we're looking at midnight to 8, 8 to 1, 1 to 7. So midnight to 8, 8 to 1, 1 to 7. Then our kill zone is going to be from 8 to 10. So let's jump into this. All right, vertical lines split up from midnight, 8 o'clock. 8 o'clock to 1, 1 to 7, and then our kill zone will start at 8 to 10. And what we're looking for on the concept checklist is, one, we want to frame our day using high time frame all the way down. 5 minutes is kind of like the benchmark for intraday and a small term trades. Internal versus external liquidity. So as price kind of went and created this external, it then made a smaller subset of internal liquidity here going into Asia. Now, on this day, we are going to be monitoring the price action throughout. So here we've got our news events for the Monday, and we'll look at the Tuesday as well, since we could be running a little bit longer. Nothing really going on in terms of red folder news, and a reminder of what concepts we're going to be using here. So we're waiting to see after 7. We formed our 2 bases of liquidity, external, internal, and we're going to use the kill zone to mark out our action. So as we get into the kill zone here, we can see a couple of things have happened. Internal liquidity taken, but not external. The trend has been bullish, and I'll just reference one thing here. So this breakdown of our range can be split one more time. This old high is what I'm referencing here, this old high, and then taking that premium quadrant and splitting it into another sub quadrant, again from ICT's earlier work in terms of splitting premium and discount into sub premium and discount. Not quite like almost like a splitting a range, let's call it. Let's use that. So from splitting the range, we're seeing that we're still dipping down into a discount level one more time here. This discount level after this old high, and as we get into the kill zone, we're also seeing a sweep or raid of internal liquidity, not breaking external, and then a market structure shift. So a shifting above these 2 internal highs. Now, when we get into the kill zone, we can either use a 5-minute, 4, 3, 2, 1, and we're looking to see what activity. And so as we break down into the first 10 minutes of the kill zone, we'll start jumping down to see if we see any refinement on a shift. Initial thoughts are, after this market structure shift, we're going to return to an area of discount. So first thought is this order block or on the body. And the beauty of that is that it gives an opportunity to see, are we actually going to shift? So let's go down to the 1 minute. And here's that price action on a mitigation. So that shift on the 1 minute is a mitigation block. We also have a fair value gap below, which is a valid entry. And we have a balanced price range down here. So initial sentiment is bullish. Initial considerations are bullish. We have a 5-minute market structure shift, and so the entry technique would be on 1, 2, 3, or 4 possible areas. So as we dip into here, we're looking for an entry at any one of those points, and the idea is to start looking for projections. The other thing that looks good here in terms of a shift above this buy side and this buy side, and then retracing into this range, possibly optimal trade entry, high to low, here to here. And so that OTE lines up well here, just after the start of the kill zone. And we'll just mark out the 70.5. And we'll see how the rest of this plays out. So now on the 1 minute, we're forming buy side liquidity above here. No news event coming up, so next time marker is going to be 9 o'clock. Very nice shift out at 8:30. So let's put a vertical line at 9 and look at what possible continuations could be happening at 9. I'm always interested in keeping an eye on the 5-minute. So we can see a solid displacement out on the 5, again breaking structural, leaving another mitigation block inside of this fair value gap. I'm always a fan of taking the bodies unless the high splits a fair value gap. So this is our mitigation coming into 9. And one more time, we're looking at ranges. So from this low to this high, we have a retrace tagging into the optimal trade entry, solid displacement, whether it was on the wick of the order block, body of the order block, again, the wick split in a fair value gap. The body of the order block stops below the low, optimal trade entry, or the balanced price range, BPR. Any of those would be possible entry areas. So as we get into 9 o'clock here, one more time. So at 9 o'clock, we're looking to see what opportunities may exist. Going down on the 1 minute, starting to see some consolidations. This order block would not have been tagged. The wick was a relative equal high here, or the high of that wick and the high of that wick are just about the same. So we'd keep looking. Okay, next marker would be 9:30. The same idea in terms of taking ranges in price is taking ranges in time. So ranges in price are taking high to low 50%. Ranges in time are taking hourly candles and 50%, and then hourly candles and 1/4%. So that's what I'm looking at here as we get into another set. So we're waiting for that 9:30 time frame. So let's go back up to the 5 and see buy side liquidity being tagged in again. And here we go for 9. So we're back down to the 1, and right at 9 we had this displacement breaking this buy side. So anything in this range would be of interest. For example, there's a very small fair value gap between this candle's high and that candle's high. So this order block would be of interest. And I'm prone to, if they're small candles, I'm prone to take the wick as well. So 2 possible entry points here. And we'll see if we tag. Stop would have to be below this swing ideally, or this swing aggressively. And let's see, our draw continues to be that fair value gap above. So here, this H1 fair value gap continues to be that draw in terms of where would this price go. And the preceding swing is here. So let's mark that out as well on the 5. So in terms of projections, we know we've got a drawn liquidity on this H1. So let's go back up there. So on the H1, after price broke this range, we're looking at this H1 fair value gap. 50% level of that is the draw on liquidity. Again, the concepts being taking a range, splitting the range, taking a fair value gap, splitting a fair value gap, taking an order block, splitting an order block. So all of those concepts are blending right now as we're tracking price. So down on the 5 minute, we're looking at the swing that preceded the move. So that would be this swing. These are the swing points that preceded the move from low to high. And if we're using the H1 fair value gap as a target, I need one more. 4.5. Let's do 5. Go. So -5, this would be our most ideal projection, which is the next standard deviation above the target. Also covered in one of ICT's shotgun teachings. So that's our projection going into midnight. And now let's see back on the 1 minute. We're on the 5 minute already. And so we're looking at this area here on the 1 minute to be tackled. And let's see how that plays out. So we get our 2 tags. Nice. So we have a displacement above the high. So now we're looking at, from this time frame, 9:30, we've got two possible entries. One down at the start of the kill zone, and then another one on a continuation using the anchoring of time. So order block wick, order block body, potentially even this candle here, 1, 2, 3, 4 in this consolidation, lowest closing down close candle before the displacement higher, qualified by a fair value gap. But any one of these would be continuation entries as well. And then at this point, we're coming to the end of the kill zone. Last opportunity would be 10 o'clock. And as price plays out here, let's see if there's any retracements around 10. Okay, so as we close on 10, we're looking to see if we get a displacement to suggest price continuation. If we were looking at anything based on this high, it would be from the displacement here, so anything in this leg. If we see a displacement above this high, then we're looking at anything in that leg. Okay, so at this point, we have one more displacement, very choppy. We have some sell side below here. There's a fair value gap under here. And so this whole thing, if any entry, would be on that level. And again, draw is coming up here at this projection. Okay, we're staying consolidated. So no tag on that last order block as we continue to make very choppy moves. There are obviously some additional breaks in ranges, like for example here into this fair value gap, which was not what I was looking for before this order block or something in this area of discount would have been tested. But depending on how aggressive and how late you'd be staying up, that would be the move. And then we're looking to see if price gets into, we'll jump up to the 5-minute, price gets into that H1. So we're now inside the fair value gap. So anything in here is fair game in terms of taking more off the table. But the 50% and possibly the projection, and we'd have to close everything up by 2, because now we're getting into a whole different range. And there's 2 o'clock. So you'd have to close everything up just about here. Maybe, you know, if you want to leave something on. It does get to the 50%, which is great. Right on the tag, that's 205, and doesn't push up to the projection. Wonder if it will. No. So then it starts breaking down, gets up to the 50%. Doesn't quite get to the final projection, but that's a good target. So possible entries, like I said, looking really tight in this area. Which is tight on a 5-minute, but on a 1-minute it all makes sense based on the time. And then again, kicking off inside of the kill zone. So that Asia kill zone model can really work well. And yeah, want to again call out to these 3 traders, ICT, MMXM, and Nexus Blast Trading. Great information being shared, and happy to share this one with you. All right, man, let's do it again.